Today, Bitcoin hits a new record high for a second day in a row. Top holders of Trump's meme token gear up to have dinner with the president tonight. And Arad of Solidus Labs weighs in on the Senate advancing a major crypto regulation bill on a bipartisan vote this week. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto markets are in the green this morning as Bitcoin hits yet another record high today. As of noon Eastern, the cryptocurrency was trading at $111,360 after hitting a new record of just under $111,900. Meanwhile, Ether rose 3.8% to $2,666, and Solana climbed nearly 4% to just under $180. It's been a slower than usual climb for Bitcoin, driven by increasing institutional ownership of the cryptocurrency and corporate adoption of the token. Other key catalysts: easing trade tensions between the US and China, and the Moody's downgrade of US sovereign debt, which has highlighted alternative stores of value like Bitcoin. Okay, let's talk about the top stories. Tonight, President Trump is hosting a private dinner for the biggest buyers of his personal meme token. Supporters spent an estimated $148 million during a 3-week contest for the chance to dine with the president at his National Golf Club in Virginia. The guest list includes the top 220 holders of the token, many of them from outside the United States. One of them is Justin Sun, the Chinese-born founder of the Tron blockchain, who confirmed this week that he won the contest. In 2023, U.S. regulators charged Sun and his company with selling unregistered securities and fraudulently manipulating the price of the digital token Tronix. But in February, 1 month into Trump's second term, SEC lawyers asked a federal judge to put the agency's civil fraud case on hold, citing the public's interest. Tonight's event is sparking criticism among some Democrats. An evening protest is scheduled to take place outside the Trump golf course tonight, which will include Democratic Senator Jeff Merkley. Also today, Democratic senators including Merkley and Elizabeth Warren, as well as Congressman Sam Liccardo, will hold a news conference to raise alarms about the event. Watchdog groups and Democratic lawmakers are calling this the most blatant case of pay-to-play in modern presidential history. Democratic Senator Chris Murphy introduced new legislation to ban presidents from profiting off meme coins while in office, and Republican crypto advocate Senator Cynthia Lummis of Wyoming has said tonight's event gives her, quote, pause. Lawmakers, including Senator Warren and Representative Maxine Waters, have been calling for investigations. But with Republicans in control of Capitol Hill, Democrats have little ability to force real action. We reached out to the White House, and in a statement, Deputy Press Secretary Anna Kelly said, quote, "The president is working to secure good deals for the American people, not for himself, and that he only acts in the best interests of the American public." Next, President Trump's AI and crypto czar David Sachs says stablecoin legislation will boost Treasury demand. Speaking on CNBC's Closing Bell Overtime yesterday, Sachs also said that the administration expects the stablecoin legislation moving through the Senate to pass with significant bipartisan support. Now, the Genius Act, a bill to regulate stablecoins, cleared a key procedural vote in the Senate earlier this week. Democrats had previously rejected the Genius Act, citing concerns related to President Trump's personal crypto ventures, including his meme coin, as well as a stablecoin tied to his family's crypto business. They said it created an unprecedented conflict of interest. When asked whether there are sufficient safeguards in place to prevent the president and his family from profiting off legislation, Sachs didn't respond directly and instead said this.
First of all, we have significant bipartisan support for this. I think 15 Democrats voted for the bill to pass this key procedural threshold of cloture, which means there'll be no filibuster against the bill. We have every expectation now that it's going to pass. And I think the reason it's going to pass is because stablecoins offer a new, more efficient, cheaper, smoother payment system, new payment rails for the U.S. economy. It also extends the dominance of the dollar online, and it also creates billions of dollars or trillions of dollars of demand for our treasuries. So I think for all these reasons, the stablecoin bill is going to pass, and it's going to pass with significant bipartisan support.
All right, sticking with crypto regulation for our main story, Crypto World's Talia Kaplan spoke with Arad of Solidus Labs about the Senate advancing the Genius Act this week. He also breaks down a new model for trade surveillance aimed at helping compliance teams manage illicit content.
Big news this week for crypto legislation in the U.S., with the Senate advancing the Genius Act stablecoin bill on a bipartisan vote. The development came 2 weeks after Senate Democrats united to block the legislation. More than a dozen Democrats joined the majority of Senate Republicans to vote yes in advancing the bill, which now includes an amendment that addresses key concerns for Democrats. What does this development signal to you, especially given the bipartisan support? And what do you think this means for crypto regulation in the US?
It means that we're moving forward very, very fast. The legislative process is always complex. There's always politics involved, which is what we saw about 2 weeks ago, as you mentioned, when a week before that when it didn't pass. But it passed cloture, meaning they're done with debate. And from what I understand from my sources on Capitol Hill, it'll move to a full Senate floor vote next week. With this bipartisan momentum, we can expect it to pass. After that, it will need to go through the House as well, and hopefully we'll be able to see finally a U.S. stablecoin legislation in the next few months. But the momentum is very strong.
You said the next few months, but President Trump specifically said he would like to have a crypto bill on his desk by August before Congress's recess. Do you think that's plausible now? And what do you think this development for stablecoin legislation means for other crypto-related legislative priorities like market structure?
So, August is in a few months. Most people I'm speaking with on Capitol Hill are optimistic that it can be done by August, the stablecoin bill, potentially market structure as well. Again, when it comes to politics, there can always be unexpected surprises, but there's real intent and momentum. It would be incredible for the crypto industry, not just in the US, but globally. Stablecoins are so important for the US geopolitically. They drive demand for the dollar. They give more people access for the dollar. And it's also really important for our industry, which has been trying to innovate, and we'll be able to do that with clear regulation and making sure they're abiding the law as we move forward. So very optimistic that it will pass, and very optimistic that it will mean great deals, a great deal for the industry, and pave the way for market structure, which is also a very important piece that's coming up. There's a draft in discussion, and again, a lot of intention by folks on Capitol Hill to get it through by August or as soon as possible. There could be challenges, but we're getting close.
Now, I want to switch gears because today Solidus Labs unveiled a new model for trade surveillance operations that leverages AI agents. The goal, to help compliance teams manage all the illicit activity and manipulative trading efforts impacting the industry. Can you take us through this new model? What prompted it to come about? And is there a crypto component in this new model as well as AI?
So this is very relevant for crypto, but it's much bigger than that. The agentic-based compliance solution that we actually unveiled today, so your viewers are some of the first to hear about it, is really a game changer. It's not about using AI to increase efficiency by 20%. It's about really transforming the way compliance and trade surveillance is done. Essentially, it introduces a fleet of AI agents that are autonomous and can work with compliance and surveillance professionals to really remove a lot of the very repetitive, bureaucratic day-to-day elements of compliance work, and really help compliance professionals focus on what they signed up for, which is fighting crime and protecting consumers. The untold story, unfortunately, of compliance, even in traditional finance, is that it's not very effective. There's still a lot of financial crime. We often talk about the concerns in crypto, but the truth is that there's a lot of scam, fraud, and market manipulation that is unresolved in traditional finance, despite the fact that there is enormous resources and very clear regulation. We had to build our surveillance solutions in the crypto industry that is significantly more complex, more dynamic, 24/7, etc. And therefore, we had to build it differently to look at more kinds of data and utilize AI, including this new agent release, in order to create efficiencies and allow permissionless markets, more open markets where retail engages directly. We see that everywhere in capital markets, but to nonetheless monitor through volatility, etc. It's really a game changer, and we're seeing incredible response from our clients as well as from the industry at large.
Now, earlier this month, Solidus released a report on how fraudulent meme coins on Solana threaten crypto compliance and consumer safety. The report revealed that 98% of tokens on Solana are rug pulls and pump and dumps. What are some of your other key findings?
So, Solana is a really exciting technology. It's a really exciting blockchain. It's been increasingly getting traction and more adoption and users in the space. However, a very large part of its volume, to a large degree because it's very efficient, right? Transactions cost sometimes as much as a cent, as little as a cent. It attracts a lot of meme coin activity. Meme coins are a big part of crypto culture. A lot of people love them. I love them in many cases. However, a report looked at 14 months of meme tokens that were launched specifically on a platform, Solana platform called Pump.fun, and found that 98.7% of them are essentially pump and dumps. What we mean by that is that oftentimes within hours, there's no liquidity left. So what it means is that a lot of people that invest in meme coins because they like it and it's fun, almost 99% of them don't see the assets grow, and the assets become essentially of no value very, very quickly, sometimes within hours. We also looked at liquidity pools on Radium, and we found that a huge percentage of them is ultimately rug pools. Essentially, people invest in them, and then someone runs away with the liquidity. The bottom line is that to really make meme tokens work for broader publics, they have to be fair. When we look at this, when we see that so few people actually make money from these tokens, or at least maintain some of the value they invested, it feels predatory. It feels more, very much like an unregulated casino. It's very, very important for us to raise that, because we know that developers, there are a lot of integrity-driven developers, integrity-driven investors, so that they're aware that that's currently the situation. Ultimately, markets that aren't fair don't last, and we want the meme token market and crypto markets in general to be effective, integrity-driven, and which would make them last and fulfill their potential. Some very troubling reports, but again, it's the transparency of the blockchain allowed us to do this research, and we believe that over time, sunlight is the best disinfectant. So the more we talk about the problems, the more people can see them, the more they know how to pick how to invest wisely and use crypto to help increase their wealth and improve their financial health.
Okay, that's all for Crypto World today, but we will be back again tomorrow, and we'll see you then.